What's up, guys? Welcome back to the channel. Today I'm going to be discussing Schrödinger Inc. and why I believe it's a good investment. The company is a mixture between a drug discovery company and a software company, and I believe it's a little misunderstood by the market. So today I'm going to be discussing my bull case for the stock and why I believe it's a potential 10-bagger. As always, if you find the content of the video useful, please drop a like, hit subscribe, and yeah, let's jump into Schrödinger Inc., ticker SDGR. Okay, so like I said, SDGR is a company that is both in the market of software creation and drug discovery. I know that the company has hired some of the brightest minds in the field, and I believe in the company's business model as it gives it a competitive advantage, which I believe will lead to large increases in revenue over time. The recent IPO leaves the company with a market cap of $3.6 billion, and after a run-up from $30 a share to around $90 a share, the stock has since fallen back to $50 a share, which I believe presents a good entry point for a compelling long-term investment. I believe the market is generally confused about the diversified nature of this company, so I would just like to give a surface-level analysis of the company and why I believe it's a good investment. First, we're going to discuss the software side of the company. Schrödinger creates software in the area of computational chemistry, which helps drug discovery companies run mathematical models that make the drug discovery and other material science processes more efficient. According to their investor relations presentation on August 20th, 2020, the platform can decrease the time of drug discovery by up to 4 years. The company is successful at selling this software and as of the first half of 2020, the company showed a 24% year-over-year growth in revenue, which is coupled with a 16% compounded annual growth rate in revenue since 2013. The software side of the business is run at a profit currently, and SDGR has major partners in companies like AstraZeneca, Thermo Scientific, Twist Biosciences, Takeda, and Sanofi. SaaS companies are currently richly valued in the stock market due to the superior business model and high revenue growth numbers that have been reported this year. Personally, I believe this valuation is justified based on the potential for these technologies to be deployed exponentially. The earnings generated through the software platform alone should make SDGR trade like a software as a service company. However, I believe the potential growth of the platform is confused by the fact that the company also engages in drug discovery. The enticing part of the software side of the business is that they not only sell software, but they also have partnerships with other drug companies and will earn royalties on some of the drugs that are created using their software. As most investors realize, biotech companies' share price often hinge on a drug being granted FDA approval or not being granted FDA approval. I believe that SDGR has positioned themselves to benefit from many possible approvals in the FDA pipeline solely through their partnerships with other companies. Since 2013, the number of partnerships they have has raised from 10 to 25 in 2020. I believe that the next decade will be one where we see biotech outperform the S&P 500 by a wide margin due to revolutionary discoveries and advancements being made in the areas of genomics and longevity. On the drug discovery side of the business, Schrödinger has a robust pipeline with 5 wholly owned drugs in the area of cancer. If any of these drugs were granted FDA approval down the road, the revenue generated from the pharma side of the business would become immediately profitable and thus make both sides of the business a profit-generating engine for growth. In addition to their own pipeline, as I said before, they are large equity holders in many of the companies for which they are partners. Because of this, they have exposure to a very broad drug discovery pipeline and would see large increases in company value as these partners bring drugs to market. And this potentiality is not even counting partnerships which may be presented to SDGR in the future, which I think is a very strong possibility given the growth they've seen in the last 7 years. The business model of SDGR is very compelling, as I believe they have a network effect in place that could prove to generate exponential returns for them in the future. And honestly, I don't quite believe the market has priced this potentiality in at current levels. Maybe that's why the stock ran up to 90, but coming back down to 50 at a 3.5 billion market cap, I believe that these potentialities are not priced into the company. If you need further evidence for the validity of this investment, the stock has many notable investors such as Bill Gates, who owns $300 million worth of the company. But in even more compelling news, institutional investors have been buying shares of the stock at recent IPO. ARK Invest Genomic Revolution ETF, ticker ARKG, owns the company in their portfolio, as well as institutions such as BlackRock, Morgan Stanley, and Credit Suisse. It's always good to consider where the smart money goes when researching a potential 10-bagger, and in this category, SDGR definitely fits the bill. So when we consider the business model, potential future earnings from both their wholly owned drug discovery pipeline and their partnerships with 25 major players in health science, I believe SDGR is a good biotech stock for aggressive growth investors to allocate a small portion of their portfolio into. I currently have just under 3% of my portfolio in the stock, and I believe the stock currently represents a great entry point at these levels, which are around $50 a share. Alright guys, that's my short video on Schrodinger Inc. and why I invested 3% of my portfolio in it. I hope you found it informative. Remember to do your own due diligence and that when I take a position in a stock, I'm looking long term. Personally, I wouldn't be concerned if Schrodinger stock dropped 50% next month because I believe in the strength of the business model long term. If this happened, I would simply average down into the stock and create a better cost basis for myself. As always, if you found the video useful, please drop a like or hit subscribe. And for real-time updates, discussion, and sometimes a little bit of fun, be sure to head over to Twitter and follow me at 10xbaggers. Guys, have a great day, and as always, happy bagging, folks.